All right, welcome back, ladies and gentlemen, to the Blackfire Technical Analysis YouTube channel. I do apologize about the technical difficulties. I am still battling with OBS. If OBS ever sees this fucking video, I am fucking paying my money for your service, and your service blows ass through a straw. Fix your fucking platform. For some reason, I keep having issues, even though I'm directly linked with YouTube. So I do apologize, ladies and gentlemen. I might be feeling a little fresh today. I am literally paying for this platform, and it fucking blows. And I'm wasting my fucking money. So I'm particularly not happy with this platform right now. I will be reaching out to them. But we are back at it again with another edition of the Daily Live Stream. Welcome to the channel, ladies and gentlemen. I hope you are well, happy, healthy, and safe. We have plenty to cover today. Plenty to cover indeed. Instead of seeing continuation to the downside, we saw a little bit of a bouncy bounce action a little sooner rather than later. But as far as crypto is concerned, we are still seeing lower lows on the macro, and we are still seeing evidence of that macro bearish reversal formation on the rest of the charts. We do have a lot to discuss today. I'm going to check one more time to see if we are actually live on YouTube. Yep, we are live on YouTube. That's all I want, man. I just want it to say live when I go live and then actually stream my shit. Just making sure we're good. It is Wednesday night / early Thursday morning. Again, I do hope everyone is awesome as shit. I've been awesome as shit lately. I cannot complain. We're here. Just battling out with YouTube, man. Battling out. So I'm going to do my very best for you guys to be on every day during the scheduled times that I do have for streaming. Just try to bear with me as I deal with these technical problems. It's like one problem after another. Every time I fix one problem, another one arises, and I just want it to go smoothly. So hopefully I will get in contact with the OBS customer service, whatever, and tell them that I'm paying money for this and it's not working, and see what they can do to fix my issue. So without further ado, let's go ahead and hop in. NASDAQ, stop and reversal right here. Putting in a lower, technically from a structural perspective, this is what we were looking for yesterday. Beautifully identified trendline structure here, bouncing off this region. Now the question is, will this act as a tentative higher low for the formation? Only time will tell. And only the correct analysis will tell. So looking at this here, we did confirm this region as resistance back on the 4th of September here, and boom, hit that diagonal trend line, which did not exist previously, but currently exists now, and put a nice reversal style candlestick, or aka a bullish engulfing, above yesterday's candle closure. Now we are looking to confirm new tentative resistance, and I do have to say, honestly, this wasn't out of the question. A move like this was entirely possible here. Am I looking at this as, an uptrend in formation? Yes and no. And we'll definitely cover the reasons why. We'll just cover the analysis first, though, right? So we did see a breach of resistance here, looking for new tentative support to be confirmed on today's candle closure and today's candle closure alone. If we do see today's candle closure close above this tentative resistance spot being 12,190, I will look for a move towards that 21 exponential. And we did identify that in last night's stream, that a move back to retest the 21 exponential is entirely in the realm of possibilities here for this price action movement. So if we do see that closure above, I would be looking for the next target somewhere around 12,530. Now things get a little exciting from that point. If we do see an opening closure above that 21 exponential, that likely means that the majority of my positions will get stomped out, and I will be looking to exercise some long positions. We could be looking at some new positions formulating here from a 21 exponential perspective in the next few days, realistically. But we got to look at all of the perspectives, right? I still have my bearish goggles on. I am still looking at this entire structure from a macro bearish perspective. Again, we do have this beautifully identified well supported resistance here. Lots of touch points to provide that evidence here, suggesting that this is still that very, 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 very critical ceiling of resistance for this price action. And I'm going to be looking for price action to continue downward long term, as long as we, number one, remain below the 21 exponential, and number two, remain below the current lower high structure, until we see open closures above the 21 that force price action to higher highs. I am still looking at this from a bearish perspective. Now, rising lows is always a good thing to understand and identify. It definitely looks like this market is trying to push in a different direction, but we have to remain skeptical from both sides here and suggest that, we could just pop up, hit that 21 exponential, and get rejected all the way back to the downside. For this price action, that is what I am going to be planning for here on the bearish perspective. I am planning for a rejection at 12,560 here, and if that condition is met, I'm going to be looking for lower lows. I'm actually going to be looking for this price action to go ahead and move on down towards 11,815, towards new lower lows and a new support level being tested. Now, what does momentum oscillators tell us here? RSI looking rather weak. It is forcing the exponential here to be less negatively sloped than previously before here, but we do have a nice, guess what, support structure on that diagonal trend line. Now, will we see a breach of that RSI exponential or not? Again, plan for everything, expect nothing. Price action still remains below the 21 exponential. A little bit of a pump to the upside definitely could result in a rejection, or it could result in a breakout formation. It could result in a macro structural uptrend formation, which would be very tradable and potentially very profitable on the ladder. So, looking at this, I'm staying strong, right? Price action remains below the 21 exponential. Number one, RSI remains below the 50 read, does have a higher low. Number two, stochastics is still in the bearish critical territory, although we do have a firm cross and a positive push from the exponential here. Nothing is set in stone until the one condition is met. I see a breach above that 21 exponential and confirmation, right? Now, again, if we do see that breach above the 21, I'm going to play it level by level. I'm going to be looking for the first target to be like 12,930-ish, give or take here. And then the next major target being anywhere where this diagonal trend line of resistance is here, a push towards like 13,250 here. But again, I don't get, excited for an uptrend until this one confirms as an uptrend, which would be a confirmed change of behavior above 13,720. Until I see that condition, I have to remain skeptical and look for rejections. Again, we are below the 21 exponential. The 21 exponential has a very, very well-defined negative slope in formation here, losing a little bit of that steam, but again, nothing that convinces me that this is ready to boom to the moon just yet. I could be wrong. I could most certainly be wrong, but guess what, ladies and gentlemen? I have a fucking plan if I'm wrong to still profit. And again, that's any trader's dream, is to be wrong in the analysis and still profit on the other side anyway, right? That's the entire goal. My opinion doesn't matter. The technicals, what the chart is telling me, is what matters. So for now, we do have a nice, stop and reversal formation on NASDAQ. Potential, right? It's not a formation yet. It's a potential stop and reversal formation. Just going to be paying attention for the next couple of days to see how this one plays out. SPY futures, same thing here. Nice stop and reversal, and look at this. Oh my goodness. See how you can just play around with things and sometimes they work out. Nice stop and reversal formation here. This one a little bit more girthy. We did not, actually we did breach. That's right, we breached yesterday. I was looking for tentative resistance to be confirmed at this region. This was not confirmed as resistance, rather still remains as tentative support here, sending price action all the way up, testing the next resistance roughly around 4,000 bucks even. Looking to confirm today. Nothing doing there, in my opinion, until we see an open and closure above the next resistance. Any open and closure above 4,000 bucks, 3,990. would lead me to believe that a push towards that 21 exponential is the next possible move here, somewhere around 40, yeah, 4,040 bucks here. But again, until I see open and closures above that 21 exponential, I'm not going to be looking any further. Rather, I'm going to be looking for the 21 exponential to reject and send price action to lower lows. And if that condition is met, I'm going to be looking for price to move all the way down to 37.81 here, which again, while my positions ride on the short side at the current moment in time, I am very, very, very excitable if this decides to move to the downside. If not, I've already taken profits on 2 of the moves. I've already secured a risk-free opportunity on, what is it? Apple? No, it's Google. Google is now a risk-free opportunity, which means if Google reverses and hits my stop loss, I get out in a profit anyway. And my risk is very, very, very small for the remaining time of this position right now as the days go forward. So it's not like I'm scared or anything, right? Keep the emotions out of it, ladies and gentlemen. Keep your emotions out of trading decisions, right? So looking at this one, if it does continue towards the 21, I'm very skeptical to see if that breaches it. If it does, and we see confirmation above the 21, I'll look for the next major target, which is right around 4,100 bucks here, and likely even see a push all the way towards 41.77. Again, very tradable, especially if the managed risk is tight towards your edge, and that edge for this channel being the 21 exponential. We could be looking at some opportunities, or if you've missed your short positions, we could be looking at possible re-entry points at the 21 exponential as well. But again, looking at the trending formation, this, sometimes it gets a little rough, right, for the decision-making part. And I leave the decision-making on the 21 exponential alone. We technically have an uptrending structure here. This could be classified as a structural higher low for the entire formation, which would put my short theory in the wrong section of the analysis, right? The incorrect theory of the analysis. But at the same time, we're looking at the macro trending structure still being very, very bearish overall. Is it time to be skeptical? Sure. Is it time to be vigilant with your edge? Mine being the 21? Absolutely, right? And no matter what signal appears on the price action chart, ladies and gentlemen, I'm going to be taking my edge over my opinion. My opinion doesn't matter, and this is where the profits come into play. If you leave the emotions out of the decision making and let the technicals decide for you, it's almost like you can't lose. It's almost like you can't lose. It's incredible. So looking at this one, I'm very, very confident that momentum oscillators for SPY futures look very similar to NASDAQ here. Yep, stochastics here, nice firm cross to the upside. Could be taken as a critical buy signal. But again, I'm skeptical. I want that 21 edge to play in, right? And we definitely see a girth of momentum here, a thick, veiny girth of momentum here with the stochastics to the upside. Very, very decent signal. But again, here's where I'm skeptical. RSI already looking like it's losing a little bit of steam when it comes to touching that exponential here. We do have that trending line in formation, but will it hold? We already have multiple touch points, right? Multiple touch points on this diagonal trend line of support here. Will it hold or will it fail? That is the question. Same thing with the structure of the price action, right? Will it hold or will the bear market continue? Now, we can answer some of those questions with, you guessed it, the US dollar index, which is still extremely bullish on all accounts, but we do have some sell pressure signals finally setting in here. Breach of that 1.618 Fibonacci extension yesterday. We did not confirm that extension target as new tentative support, rather got sold into. Now we're looking for confirmation. No, excuse me, I was wrong. We did not confirm support. This is still resistance. And since this region here at 110.075 is still acting as tentative resistance, it is very safe to say that a move all the way down to the 21 exponential, right around 108.70 is likely the next course of action for this price action. And we already have one critical signal flying off here. Bearish divergence playing out on the stochastics. If you don't know what bearish divergence is, let me fill you in. Bearish divergence is as follows. We have higher highs on stochastics and price action, and then higher highs again on price action, but the stochastics puts in a lower high. Bearish divergence. Bearish divergence on the stochastics is playing out, and I do not think that this is the end of that move just now. Now, does this put the entire trend at threat? Absolutely the fuck not, right? And again, this is why I'm more skeptical of the possible uptrending formation on the other charts, just because the US dollar index on the, immediate term, short term, medium term, and long term perspectives has absolutely been cataclysmically bullish for quite some time. I mean, look at this formation. I mean, the price action doesn't lie. Right there, I mean, freaking shit. Since the beginning of 2021, this thing has been absolutely flying off the handles, and I don't see a critical end to that at all, at least until I see a reversal, a change of behavior. I'm going to get rid of this right here. A change of behavior below this point, 105.050. Until I see open and closures below that region, it is very, very, very intelligent to suggest pullbacks all the way to the 21, and even more all the way down towards 107.13 to potentially look for some kind of higher low formation in this structure before liftoff. And again, until I see that confirming change of behavior below the current structural higher low in this formation, I am absolutely blue skies bullish on this asset. US dollar index controlling the markets. Nice little sell-off, big red day here. We're going to get some green. Same thing. Nice bearish engulfing candlestick here. Definitely an indicator of more sell pressure to come. Again, the opening above yesterday's close and a closure above yesterday's open, bearish engulfing candlestick, confirming that this region remains as resistance. Immediately, I'm going to be looking for price action to go ahead and move on down towards that 21. Now, people might suggest, well, we got all these, all these tiny lows. These are all inconsequential lows, right? We're looking at these structural lows for this formation, and just to identify only a few of them, we got a structural low, boom, right here, and boom, right here. Every other higher low or lower low in between is inconsequential, in my opinion, for the structure of this formation. So I'm definitely looking at it from a macro perspective, and until I see breaches and confirmations below 105.075, I remain bullish on all accounts for the US dollar index. RSI, escaping the bullish control zone, breaching the exponential, definitely a critical signal suggesting a little more sell pressure is definitely possible here. And then that bearish divergence call on the stochastics here with a fresh breach back into the bullish control zone is another signal that I'm looking at for sell pressure here. So again, it is suggested that potential moves to the downside for the US dollar index is very likely, but that also suggests a little bit of upside relief for the rest of the stock market and cryptocurrency market. Is it the end of the bear market? Again, I am not looking for an end to the bear market until I see an end to the bull market for the US dollar index. And that's pretty much gonna wrap it. Holy shit, I got 3 viewers in the house. What's going on? Christopher King is in the house. Welcome to the stream, my dude. If you guys have any requests for any assets that you would like me to analyze tonight, I have plenty of time. Go ahead and drop them in the comment section, and I will definitely fulfill those requests. Moving on, we're going to check out the Hall of Fame Village. Big move to the upside for this one. It doesn't look like it, but 7.5% for one day is pretty colossal here. This one looking very similar here, right? Putting in that low. It is technically a lower low. Technically, it is a lower low, but it is a low nonetheless, breaching back above tentative resistance right around the 72.8 cent region here, looking for potential moves all the way up to the next resistance here at 78 cents, 78.5 cents, especially if we confirm the new breached resistance as new tentative support. But here's the thing, no critical signals on RSI just yet. Nice little low call, but no crosses over any critical thresholds here. Not even a test of the exponential. The exponential still remains very negative in this formation. 1 drive, 2 drives of bearish divergence, breakdown, right? So, from this perspective, you could say, oh, well, but Brian, we have a trend. We have a trend line. Technically, you would be right, but I need to see follow through for me to be convinced that this is a legitimate uptrending formation. Oh, crap. I always forget. We are very well below the 21 exponential. It would not be out of the question to pop all the way back up to 86 cents, 86 and a half cents over time as this price action plays out. But again, I am skeptical until I see confirmation above that 21, right? That is where my risk management and my safe play comes into effect. I don't take a trade unless I get confirmation with my edge. And some people, maybe there are strategies where it tells you to take the trade now. You could be wrong. Until I see open closures above that 21, I am skeptical of this formation. And again, I could be wrong. And if I am wrong, I'll come on the stream and say, hey, guess what? I'm wrong. I'm in a profitable position anyway. At the end of the day, plan for everything and expect nothing, ladies and gentlemen. Hall of Fame Village here. If it does breach back below 72 cents here, if we see rejection and confirmation of this remaining as resistance, I'm going to be looking for another stab all the way down at 63 cents here. Opening closures below 63 cents. Yup, I'm going to be looking for lower lows, but the first target's going to be 54 cents, which is the current all-time low for this asset. Stochastics absolutely crushed, looking for a possible fresh cross to the upside. And again, this is more skepticism. When I see a nice boom, push from the stochastics, but then I see the exponential not react at all, it just tells me it's likely to reject, right? Again, I could be wrong, but that's why I plan for everything. No, positive influence on this exponential. Definitely could be a false signal here. It definitely could see continuation to the downside. But like I said, if we do see confirmation above the newly breached resistance at 72 cents, I would be looking for a push all the way back up to 78 cents, maybe even a stab towards the 21 exponential towards 86 cents. Moving on, I want to check out Apple. This one actually not as strong upwards as I thought it was going to be. Was actually able to, again, decrease my risk management perspective, right? Decrease the amount of risk. As the 21 exponential falls, my inherent risk also falls for a short position. Technically speaking, this is like an I don't know. Give me a second. I want to make sure that I'm absolutely lined up with this horizontal resistance. That's the mistake I made yesterday. All right, so we actually only breached this support level here at 155.40, and guess what? It is still support as we see closures back above that support level. And with that condition being met, I will be looking for tests of the 21 exponential coming into the next few days or maybe next few weeks here. But no low call. No low call from an RSI perspective. It is starting to round off just a bit, but the negatively sloped exponential is still very powerful to the downside. Again, I'm skeptical, right? I'm skeptical. Is this going to play out as a real reversal, the beginning of the real bull market, or are we going to get faked out, put in some traps, and bullshitted once again? Only time will tell. And again, where I make those inferences is trend identification with the 21 exponential. We technically have a uptrend in formation, right? This was a big uptrend, but all these higher lows in this formation here above the 21 could most certainly be classified as inconsequential until we do this. We look at this and we say, hey, this could be the structural support level for a longer term bull market, right? The etchings are there. We just don't have confirmation of that yet. So I have to remain skeptical. I'm late, but I'm here. What's going on, Matt? Matt's in the house. Welcome to the stream, my good sir. Thanks for dropping a comment. If you got any requests for the stream tonight, brother, go ahead and drop them in the comment section, and I will gladly analyze those bad boys for you. Fired up tonight. Definitely a lot of confusion with the markets, at least from how I perceive it. Is what it is, right? Plan for everything, expect nothing. If you fail to plan, your plan is to fail. Thanks for coming through, brother. Taking a big old sip of that water. Gotta stay hydrated, ladies and gentlemen. Gotta stay hydrated. So for Apple, yes, we are still below the 21 exponential. The reaction to the upside was not as significant. Oh, crap. I always do that. I always forget to go back to my crosshair. And more importantly here, same thing here. Stochastics just kind of like Oop. This is so, like, this is the most sideways upward momentum slope I've ever seen in my life, man. I mean, again, nothing set in stone, nothing completely convincing me that, yep, this is the time, this is the bull market, here we go. Now, if I see changes of behavior on the US dollar index and confirmations of changes of behaviors on the rest of the market, then I'll come screaming bull market. But until then, I have to remain skeptical for the bearish perspective, right? So for this one, yep, it is possible we see a push towards that 21 exponential, but until we see open and closures above that 21 exponential, I'm going to be looking for rejections, which likely send price action to lower lows. And for Apple, that lower low first target would be right around 150.5. If we do see breaches and confirmations above that 21 exponential, immediately I would be looking for the next major resistance right around 170, and even more so, a possible stab at higher highs at 175. Any open and closure above 175, guess what? We have our higher low formation. We will have already opened positions to the long side above the 21, and we'll already be riding in the profits if we confirm higher highs and confirm this as a legitimate uptrending structure. Until then, that's all she wrote for that one, bud. AMD. Nothing convincing. Absolutely nothing convincing. Confirmed lower lows yesterday, once again. Hit this region. Did we confirm support or resistance? Support. Yep, we confirmed support. Same thing. Breach of support. Supported the price action. Closed above support. It still remains as support, so it wouldn't be out of the question to see this one pop all the way back up to 85.20 here. Yeah, that's a good level here. But again, still below the 21 exponential. 21 exponential has a very negative slope, very convincing slope. Ooh, I got a request. HRZN. Okay, I don't know what that is. I'm gonna analyze that after the bulk analysis, good sir. So for this one here, yep, we hit support here. Wouldn't be out of the question to pop back up, but again, so much divergence between the 21 exponential and price action right now. Very negative slope on the 21 exponential. Stochastics that are absolutely crushed in the bearish critical territory. The bears still have control, in my opinion, and a very, very, very slight touch of support here on the top side of the bearish control zone for RSI. The exponential still remains very negative. Again, nothing critical that tells me, yep, we're going bullish, ladies and gentlemen. And that's where I remain on the safe side for the trading perspective, right? I mitigate my risk in every possible way. Again, some people might be out there blindly buying it. Oh, buy the dip, buy the dip, buy the dip. I'm not that guy. I buy confirmation, sell, take profit, and exit on confirmation. Plain and simple. Google, this is where my risk is currently free. I am currently in the profit zone for my risk management point, which is beautiful. Proof of that. First breach here on the 19th of August. Confirmation candle closure below the 21 on the 22nd of August. This was my entry point here. And this is where the 21 exponential is here. So as of today, I am currently in the profit from a risk management perspective. And again, that is the dream of any trader. To be in a trade and know that even if this thing fucking skyrockets above the 21, I'm still getting out of this position in a profit. Even when a trade goes bad and you make money, that is the professional trader's dream. That's what every professional trader wants. Come on, chair. Fucking carpet. So for this one, same thing. Big boom, big reversal, big move to the upside. Do we have a higher low? Technically, yeah, technically speaking, we do have a diagonal trend line of peace and prosperity. Formulating right here, like, oh, come on. I do this, you know what? Fuck that. I do this every time. Big diagonal trend line of support, carrying up this weird, choppy, sideways consolidation formation for Google. Does this mean it continues to go sideways? It definitely, most certainly could, because even in the relief rally for the remainder of the market, this one just kind of continued to go sideways. It did put in higher highs technically, but we're right back down to that consolidation low support level. Nice reaction off that point. Bullish divergence identified from a RSI perspective. This one actually looking a little more cleaner, putting pressure on that exponential, which is currently flatlined. Stochastics giving you a halfway decent signal. Very strong cross above the exponential, but the exponential still remains in a negative slope. Again, we get a lot of chop with some of these formations. This is, these are regions where I'm not looking to enter trades, right? This is where I'm looking to mitigate my risk on the short positions below the 21 exponential and prepare to exit if need be, and prepare just a few days later to re-enter in some long positions. So currently, technically, the only thing I'm doing right now is mitigating my risk. Outside of that, I'm doing nothing right now. I'm just watching as price action unfolds for the possibilities. So Google could easily see a pump all the way back up to 113. Test that 21 exponential. Any open and closure above that 21 exponential, I will look for the next resistance, which is a major one, towards 117.90. But if we come up and hit that 21 exponential and reject, I'm going to be looking for another stab towards the consolidation lows at 106.80 and possibly even lower, right? If we do break the bottom side of this formation here, I don't even have levels identified for that. Let me go ahead and pop one of them on that bad boy. Oh, we got a gap down there. Oh, yeah, this could get fun. This could get real fun and juicy. Yep, any open and closure below the current support, which is right around 106.80, I will immediately look for price action to decline all the way towards $100 even, which again opens up more opportunities. In my opinion, opens up more opportunities. Like, if it does act as resistance at the 21 exponential, we have ourselves, probable cause to re-enter on positions, right? Rejection at the 21, re-enter. It's just my strategy in a nutshell. Take the 21, re-enter on the 21, get out when you see the opposite play on the 21. Bingo, bango, boombo. So for this one, just again being patient, just like the rest of the market. I'm being patient right now. All right, let's do Bitcoin, and then we got a request for tonight. If you guys have requests, man, go ahead and drop them. And do not be shy. Throw as many in there as you want to. I'll do them all. Bitcoin, again, this one's a little different here because we've confirmed macro lower lows. We have taken out the macro lower lows and confirmed lower lows. So this is, again, another reason why I'm a little skeptical. Bear market confirmation. Bear market continuation confirmation is when a structure confirms macro lower lows. We see a little bit of a relief, we hit a specific point, confirm a lower high, and continue from the macro perspective to the downside. That is what I'm looking for on all accounts, and for this one especially. Bitcoin is usually the first warning sign. The first warning sign if a market is going to continue one way or the other. And this is a warning sign. Lower lows on the structure. Yes, it would not be out of the question for this one to pop back up to that 21 exponential, which is right around $20,400. But again, I'm skeptical. Very aggressive slope to the downside for the 21 exponential here. RSI looking choppy as shit, playing around with that top side of the bearish control zone here, staying below the exponential and rejecting it along the way the entire time. And then stochastics here just kind of chopping around, slowly stair-stepping its way up in the bearish critical territory again. Until I see a critical signal above that 21 exponential, I have to remain skeptical in that it is possible to see the 21 exponential reject. Am I planned for the opposite occasion? Of course. Again, that's the game. I am planned to take trades above that 21 exponential if I see the signals. If the chart tells me to close my shorts and open longs, that's exactly what I do. As long as my risk is mitigated the entire time, I am not worried about any of it. So for Bitcoin, pop back up to the 21, maybe even a fake stab towards 21,250. Open and closures above that will lead me to believe a move to 21,250 here is very likely the next move here, but I would realistically be looking for a stab towards this one right here, 21.5, maybe 21.6. But if we reject, I'm going to be looking for lower lows. I'm going to be looking for the new target towards 17,715, and then likely lower if this one continues in a bearish fashion. Now, let's pull something up on Bitcoin here. That's not the chart that I want. I want this chart. Yeah! Gonna get rid of CT Mac. Let's see what the... Yep. You see what I'm saying? Now, let's do some cross-referencing here. How long did this bear market last? Back when the 2017? Confirmation. confirmation. 420 days. 420. Whoop, whoop. 420 days for that bear market. This bear market was the coronavirus crash. 224 days for that bear market. What did I just do? Oh, I hit the wrong button. We're just kind of differentiating the time frames. 40 days. So this bear market's actually gone longer. This one's actually lasted longer than the 2017 dump into that bear market. So we've been in a bear market for quite some time, ladies and gentlemen. And again, that's why, that's why I'm raising awareness for this structure, because could it be the end of the bear market? Absolutely, it could be. Are there any signals specifically telling us that it's the end? Absolutely not. But could we be looking at the possible end of the bear market? Absolutely. Anything can happen at any given time, ladies and gentlemen. But until I see those signals across the board, man, I am skeptical as shit. Now we're going to go ahead and move on to this request. Again, no more requests. Drop them, man, if you got them. Smoke them if you got them. We're going to do Horizon HRZN. HRZN. Horizon Technology. I hope this is a dog shit chart, bro. Actually, this one's not bad. I mean, it's kind of bad. It's kind of bad. It's kind of bad. First legitimate bull market after the coronavirus crash. Lower high. Oh, boy. Oh, yeah. We're going to have fun with this chart. All right, so this one, man, similar reactions on this price action chart here. This one's choppy too. This is another one of those charts that's too choppy to play the 21, at least from my perspective. I'm not saying there are bad 21 plays. There are definitely some good 21 plays, man. But sometimes when these formations get choppy like this, I tend to stay away from them. This one confirmed below the 21. Right around the same time NASDAQ, right around the 19th, right around the same time NASDAQ did, and it's kind of playing out in a similar fashion. But with this one, we just confirmed new tentative resistance. So immediately, I'm going to be looking for continuation to the downside here for this one. Right around $11.67 is going to be the next target that I'm looking for here. Stochastics, weak cross to the upside. Again, no critical signal saying, buy. Very soft cross, not confirming anything. No low call on our RSI just yet. But again, very similarly as the rest of the stocks that we looked at here. Again, you can kind of notice how everything sort of ebbs and flows together. When you look at the momentum oscillators via price action on all these different charts, you see how many of them actually correlate with each other, how much of them have so many similarities. And same thing, big decline below the exponential here, and boom, we hit near the top side of that bearish control zone and fork up a little bit. We could formulate an uptrend out of this. Again, it is very possible, but I'm still skeptical until I see opening closures above that 21, which we'll talk about now. If we do see a breach and a confirmation closure above $12.30 on this one, I will be looking for the 21 as the next tested target for the move, right around $12.75. Any opening closure above that 21, I immediately look for the top here at $13. We'll call it $14. Yeah, we'll call it like $13.93 to $14. I would look for a move there. But if I see breaches of that region, guess what? We have ourselves an uptrend. We have ourselves a legitimate, healthy uptrend for this formation. And, the trend is your friend until the end of the trend. But again, from the macro perspective, ladies and gentlemen, same thing. Big diagonal ceiling of resistance, which actually is support right now. This was actually pretty choppy. Hold up. Could be could be resistance. Could definitely be resistance. We don't have that many touch points confirming here, but again, it looks similar in fashion. Big downtrending bear market here, hits the macro lower lows. We get a relief rally just like on almost everything else that we look at here. Hits the ceiling of resistance right here, and closes back below that diagonal trend line of death and destruction here to confirm his new tentative resistance. So if we do confirm a higher low here, that might be an incredible feat to see this resistance act as support once again. But again, from the macro perspective, will I take a trade above the 21? Absolutely. Even in a bear market, I'll take a trade above the 21 exponential as long as my risk is very, very, very tight here, and I will look for positions to move towards the next relevant ceiling of resistance. But I don't come out screaming bull market, bull market, bull market until we have a macro structural uptrending formation, and that will only be confirmed, ladies and gentlemen. Again, this is one of the most important points. You can trade these little moves, within the macro perspective. But if you trade these little moves with the expectations that we're going to see macro bullish moons to the fucking moon, you're probably going to lose every single time, period. So until I see a change of behavior above, that $13.90 resistance level, I'm going to remain skeptical on the bullish perspective, and I'm going to remain more bearishly biased until proven otherwise. Any more requests? No, that's going to do it for the stream, ladies and gentlemen. Another delicious stream in the books. Another day of recording data in the books. Thanks for coming through, ladies and gentlemen. Thanks for hopping on the stream. Actually, no. There's one more I want to do. For the one viewer that I know is watching, Shiba Inu. Me and my partner pay very close attention to this asset here. And we are currently consolidating below the 21 exponential on this one. Very choppy around the 50 read here. We could be looking at a break to the upside or a break to the downside here, but we are evidently below the 50 read here from an exponential perspective and an RSI perspective. No real structure to be had in this micro structure, but again, same thing. We have a potential for an uptrending structure right here and right now, but it has to act as an uptrending formation. We are below the 21 exponential. It wouldn't be out of the question to stab above the 21 exponential and take a poke towards 13,044 or 1,344 satoshis, but we are below the 21 exponential at the current moment in time. So a decline towards current support at 1,175 satoshis would not be out of the question. Any open and closure below 1,175, I will look for the next support level at 1,063 satoshis first and foremost. But if we breach the current resistance at 13,000 or 1,344, I will be looking for a big move towards the next major resistance at 1,700. Just wanted to do that one real quick before I get out of here. Thanks for coming through. Thanks for stopping by. Thanks for hanging out, and thanks for supporting, ladies and gentlemen, with my whole heart. I love you guys, and until next time, you already know what it is. Stay safe, stay happy, stay healthy, and stay profitable.